Of you first and foremost that are new to our community, I want to thank you for tuning in and welcome you to Trusted Smart Chain. Trusted Smart Chain is a blockchain that's focused on tokenization of real world assets. And while a lot of the people that are out there in the digital currency space are chasing hype coins, we're focused on real world utility and infrastructure. And our node operators help validate the network and they earn daily rewards for doing so. So I want you to think of it like owning the toll booths before the freeway even gets built. We're seeing this massive shift that's happening in the world of finance, and there is some explosive growth that's happening in the world of tokenization right now. We are building long-term value here, and tonight's conversation is a big one. I'm joined by somebody with deep experience in the world of global finance, Mr. Barry Seeman. And I'd love for each and every one of you guys in the chat to give him a very warm welcome. Before I bring him on, I'm going to make sure to introduce him properly. Tonight, we're going to dig into the massive shifts that are happening in the world of finance. And we're going to be talking about why so many institutions are moving towards blockchain and tokenization. So with that, before I get into it, let me go ahead and give you just a little bit of Barry's background because it's quite impressive. First of all, Barry brings over 35 years of international management experience in capital markets, insurance, and asset management. He's the founder and managing partner of Bear Run Partners, a specialized consulting firm. He also sits on the board of directors of General Oncology, Inc., and he is on the advisory board of T7X and several fintech companies. Previously, listen to this, he was the head of global derivatives and hedging in the United States for Aegon Asset Management, managing the derivatives trading and structuring unit for the global insurance companies of Aegon and Transamerica, with a derivatives portfolio ranging anywhere from $100 billion to $130 billion in national exposure. He was voted into the Volatility Investing Hall of Fame. He has a bachelor's and master's degree in electrical engineering and an MBA from Cornell University. And he has held prestigious positions at different organizations such as financial institutions coverage at Citibank, head of exotic options development and trading at O'Connor and Associates, which of course later became Swiss Bank. So with that, and without any further ado, please allow me to introduce you to Mr. Barry Seeman. Barry, are you with us?
I'm here. I'm here.
It is so good to see you again, my friend. We got to spend some time together in Irvine, and it was such a pleasure, and I'm so grateful that you're here with us.
Absolutely. And I do want to comment that the music that you were playing beforehand really got everybody rocking. I was watching a couple of the participants, sort of swinging to the beat.
Well, you can't go wrong with Sweet Caroline, right? Like that's
Absolutely.
the ultimate sing-along.
Absolutely.
Well, with that, so first of all, Barry, if you don't mind, I mean, obviously I gave a little bit of your background, but from your point of view and perspective and in your words, tell us just a little bit about Barry Seeman. Tell us a little bit about yourselves for those of you that may not know who you are.
Right. Thank you very much for the kind introduction. I think it's fair to say that because I grew up as probably an electrical engineer, first and foremost, I've always had this point of view about how to build things, how to engineer things, how to make things better. And as a result of that, I got involved in finance, dare I say, in the middle 1980s. And I was listening to the introduction, and I realized, pretty soon, I think in the next year, it's going to be 40 years that I've been involved in financial services, financial markets. I started as a derivatives trader. I ended up moving from a few banks to insurance companies. I ran hedging operations for insurance companies. And then in 2017, I left Aegon Transamerica, and I began working with a number of fintech companies. And in particular, back in 2017, I started working with a handful of groups that were trying to tokenize real world assets. Ironic that it's been going on for the last almost 10 years now.
Wow, that's impressive. So you've obviously worked at the highest levels of traditional finance. So what drew your interest towards blockchain and the tokenization of real world assets? I mean, that's a big stretch from the the engineering side now all the way over here, or is it really actually not, it's not per se? So tell us a little bit about that.
So the one thing that I would say is that technology and markets actually go in hand in hand. And I say that because if you look at the evolution of the financial markets going back to the 1950s, 60s, into the 70s and 80s, many of us remember big events like the crash of 1987, the tech bubble, various market moves, but they were all driven primarily by traders' ability to actually trade the markets. And that ability has gotten faster, more robust over time. But the one thing that's always stayed the same is that the markets have this sort of innate ability to attract money to various points in the market. So as a great example, we all probably have been tracking Nvidia, right? The stock Nvidia. It is an incredible stock. Well, one day it's up 10%, the next day it could be down 20%. And those markets have attracted so much capital and technology in trading those markets that many other companies and many other assets that could be traded are sort of left behind. So when you ask, like, why blockchain, I think there are a number of real attributes that blockchain brings to the table that makes it perfect for what we're trying to achieve with T7X and certainly the trusted smart chain, which is to create an environment whereby you can trade, or not really trade, but you can have access to an incredible amount of information. You can get a more efficient market. You can actually own fractional ownership of assets that you wouldn't typically be able to trade on the NASDAQ or the New York Stock Exchange.
Well, we see so many businesses now that are moving in the direction of tokenization, and previously the route to go and raise capital would be private equity or going to taking a company public, but there's a lot of risks that go along with that. So in your perspective, why is there such a massive growth that's now happening? These companies that are moving in the direction of tokenization.
So if I think back to 2017, when I got involved in two attempts to tokenize real estate, and it was an early attempt. It was at a time when security tokens were just coming into vogue, and for all the right reasons, it seemed like a very smart place to focus our attention. The idea was, could we take assets that might by themselves be very difficult to sell to a group of people, but do it in a way where you could own fractional ownership in, say, an apartment complex or a hotel. So back in 2017, there was a tokenization of a portion of the Ritz-Carlton in Aspen. And that was actually quite exciting. The problem back in 2017 was there really weren't that many exchanges that were available for individuals that own those tokens to actually trade them. So the evolution of blockchain is a very interesting piece of the puzzle, because only with blockchain can you create these tokens. The blockchain allows you to keep all sorts of records in that technology, meaning who owns that actual token? What are the rights and cash flows associated with that token? Is there a registry that we can point to? Can we track it through time? And all of those attributes come with blockchain. It doesn't come with other systems. It doesn't come with other technologies. So the exciting part about blockchain is it enables us to create these environments where we can now take assets that where you really need to be able to track, every nuance of the ownership of that asset through the process, and on a robust exchange environment where people know they have safety, they have security, and they can gain access to, if necessary, enhanced liquidity, transparency. I mean, you name it. It almost becomes the best of all worlds.
When you talk about transparency, I had recommended to our community to go watch a movie called Dumb Money. And if you haven't seen it, I highly recommend that everybody go and watch this movie, because what it does is it highlights the story of GameStop. And Barry, I know you know this story very, very well, but to me, it was very interesting because what it did is it shows how the stock market is really rigged in favor of the institutions, and it really highlighted some of the corruptness that goes on, the dark pools, the naked shorting. What I appreciate the most about the direction towards blockchain is that transparency, and that it puts the power back into the people's hands. So I'd be curious to know your thoughts on that time, and essentially how that highlighted what was going on and how that plays a role in now businesses moving in this direction.
So you're bringing up an excellent point. The first point is when you have a stock account, and that stock account could be with Charles Schwab, it could be with JP Morgan, it doesn't really matter. Whenever you open an account, you're not really the ultimate owner of that stock. You are the holder of record. And what that means is that the bank, Charles Schwab or the bank JP Morgan, can actually trade that stock either as a short position by lending it out to another institution and allowing them to sell it, or if you wanted to buy more stock, they could sell it to you from their inventory, or they could pick a venue of their choice to execute upon. The point I'm trying to make is that the stock market as it stands today is not a peer-to-peer mechanism. It's not a one-to-one mechanism. There are a tremendous number of intermediaries that sit between you and the actual stock. The issue that you also brought up about shorting, it is a big problem with the market, and I'm saying that as a derivatives trader. So the ability to trade calls and puts, the ability to trade swaps implies that we should be able to short. And in the purest of sense, shorting should be it should have no impact to the market. Yet, every single day, we see the impact that it has on particular stocks. So if you really want to sort of have some fun, I mean, you were talking about GameStop, but I really think that when you look at some of the stocks that have the highest short interest, meaning the highest amount of shorts against it, you could see how it has driven the stock price down and down and down. And what's really fascinating is it becomes a gem for people that trade the market. It's not a gem for people that invest in the market. And where blockchain and what we're trying to do with T7X, and remember, I'm an advisor, so I get to tell them anything, anything that bothers me about what they're trying to achieve, I get to tell them flat out. But the point I'm making is T7X has made it a point that shorting will not be allowed. What does that mean in the token world as opposed to the stock world? In the stock world, you short by borrowing the stock, selling it, and having to buy it back in the future, and then satisfy your short position, close it out. In a token world, we're not going to allow the lending of the token to another entity or another individual that would allow them to sell it and manipulate the market. So there's a huge difference between a trading market like the stock market and what I would call an investment market, where we try to identify what we think are sound investment opportunities by the standpoint that they will have registration, Reg A or Reg D registrations. They will have audited financials. They will have a whole slew of different attributes that make it an interesting investment opportunity. Once somebody buys into the investment, then that investment will be tokenized. And what that will do is allow them to have all of this enhanced, what we hope is enhanced liquidity, transparency, access to fractional participation, and do it in a way that the holder of the token knows that there's a tremendous amount of what I would call safety around that. Doesn't mean that they can't lose money. Doesn't mean that the value of the asset can't go down. But you're not going to face the potential manipulation of the market that a shorting market allows.
Yeah. You mentioned JP Morgan. I find it interesting how quickly, you only go back 5 or 6 years ago and you had the CEO of companies like JP Morgan, Goldman Sachs, that were outright saying that cryptocurrency is a fraud. Stay away from it. And today, as a matter of fact, JP Morgan is in the news because they just settled their first treasury on chain today. And It's only been 6 years. So it's amazing to me the adoption that's taken place and the credibility that's now coming from the highest levels. I'd be curious to know your thoughts on that.
So, dare I say, and I'm not saying this, I have full disclosure, I am an advisor to T7X. I do not own any nodes at this time. I want to stay clear of having any conflicts of interest here. So we're going to do everything on the up and up. But most importantly, I think the trusted smart chain is at a very unique time that your node purchasers are potentially on the front edge of an incredible wave. And I'm saying that because you look at how the whole market has shifted, and not to be political, but under the Biden administration, the SEC and the CFTC was wholeheartedly against the idea of crypto assets and formulating a policy to support crypto assets and to support blockchain and the trading of real world assets and stable coins and so on and so forth. We have done a complete 180. And this administration is not only embracing the whole idea of tokenization, but they are pushing it forward. So if you haven't already, I guess it was May 12th. So Paul Atkins, who's the chairperson of the SEC, the chair of the SEC, has come out and said the administration is in full support of tokenization and wants to work with groups like T7X to promote best practices. And he said that he wanted to focus on 3 core things: issuance, custody, and the trading of tokens, which makes perfect sense, right? So the issuance of what I would call real world assets, if you really think about this, you have an opportunity here for small companies to utilize a marketplace that's been, in essence, off limits to them. Going public costs a huge amount of money. And in a world where if you have one hiccup, the market shorts the heck out of your stock, you will have continued problems trying to raise capital in the future. The security token, or the tokenization of real world assets, allows small companies to actually go out and raise money in a very smart and prudent way and offer many of the same attributes that a public stock would offer. Then the whole issue around custody is a very, very, it's incredibly sound of the SEC to worry about how do you hold the actual assets, those tokens? What are the safeguards that you have as an individual? When you have a wallet, what does that mean? What sort of nuances are out there that can make or break that wallet? And then lastly, what does trading around these assets mean? Now, here in the United States, as it relates to Reg A and Reg D offerings, and that's going to be the main thrust of T7X, there is a holding period that U.S. investors need to adhere to. But then after a period of time, as long as it's a peer-to-peer and we acknowledge that both parties know each other, then trading can occur. This is a wholly new world that's going to allow long-term liquidity in some of these assets. So it's a very, very exciting time.
I couldn't agree more. One of my favorite sayings is smart money invests in the roads before the rush. And right now we see that rush that's taking place. Now, you talked about serving as an advisor to T7X. By the way, here in the chat, when you said you didn't own any nodes, there were a lot of people that said they'd be happy to share the referral link with you, just so you know. So you're currently serving as an advisor to T7X. What was it about this project and the team that's behind it?
Right.
I want to be a part of this.
Well, many of you have met Matt Nicosia, and I've known Matt for a number of years. And I will say that the founders of T7X have probably brought together one of the best teams of people that I've seen try to tackle this whole idea behind a crypto exchange. On top of that, one of the things that they've done is they're using probably some of the best service providers in the marketplace. Companies like Persona for KYC, chain analysis for the blockchain data and intelligence. There's a whole infrastructure that's being built that puts safeguards and technology around the ability to get these tokens online. I have to tell you that once Matt told me what they were trying to do with T7X, I not only thought that this approach with the trusted blockchain is so smart. The trusted smart chain is so smart because it will become a de facto blockchain in the marketplace. And if its main purpose is to be used with real world assets and really monitoring and ensuring structure around the trading of these, then we could actually, as an advisor, I would advise that the trusted smart chain could be used for other purposes. And here's an idea that I actually worked on back in I think it was 2018, 2019, and we presented to a little company called Freddie Mac, one of the big mortgage companies. One of their big gripe was that they would love to be able to speed up the mortgage process. And the team that I was working with, we suggested that we put their entire infrastructure on blockchain. Because if you think about a mortgage is not only the beginning, but it's all these cash flows, it's taxes, it's escrow, and you begin to think about the technology that's required to keep track of all of that information, and blockchain would be perfect for that. Then they explained to us that they felt that the title insurance market was a market that could be revolutionized with blockchain. And we totally agree with that. We believe that's spot on. And I could imagine a blockchain like the trusted smart chain to be a blockchain that's used to actually create a title registry on a national and then potentially global basis. Because if you think about it, blockchain should be the sort of technology that you use when you really want to have certainty. And that's really what that's the reason why I start connecting the dots on all this stuff.
Yeah, that's exciting. Co-founder Billy Beach here says Senator Barry Marino has established DMV VIN blockchain as a standard in Ohio, which I think is brilliant. Hey, who knows, Barry? Maybe Trusted Smart Chain can resolve our voting issues here in the United States, and we can bring voting on blockchain. What do you guys
And
think about
I
that?
promised I promised my wife I wouldn't bring politics into this.
Well, we'll keep going here. By the way, for those of you that may be new to the crypto industry, when we talk about T7X and we talk about Trusted Smart Chain, T7X is a sister company, a digital platform that is focusing on tokenizing real world assets. And the best analogy that I could give is if you go back and think about Robinhood, when Robinhood first launched, what they did is they gave the retail investor, the average person, not the traders, right? The average retail investor access to fractionalized ownership. They removed the barriers and they made it somewhat easy and cool. And that's essentially what T7X is doing. What they have chosen, or they have chosen Trusted Smart Chain as the blockchain, because all of these different tokens have to live somewhere. And Trusted Smart Chain is making that possible. Is that fair, Barry?
I think that's spot on.
Okay.
I think the ability to create, from my point of view, Trusted Smart Chain represents really the beginning of a very strong decentralized blockchain that's really, really meant to do one thing and do it really well. Yeah. And that's be the basis for security trading. And if you're the basis for security trading, then you could be the basis for quite a number of things.